The market doesn't take your money in one violent moment. It takes it quietly, when you stop thinking clearly. Most traders believe the difference between losing and winning is strategy, indicators, entries, the perfect setup. That's what I believe too, until I watched two traders take the same trade and walk away with completely different outcomes. Here's the hook most people don't want to hear. The market doesn't reward intelligence, it rewards emotional discipline. And if your mindset is broken, no strategy will ever save you. I remember sitting in front of my laptop late at night, charts glowing in the dark, convinced that one more trade would fix everything. My plan was solid, my setup was valid, but my mind, it was exhausted, emotional, desperate. I wasn't trading the market anymore. I was trading my feelings. That's when it hit me. Trading isn't a battlefield where the strongest wins. It's an ocean, and your mindset is the ship. You can have the fastest engine and the best navigation system, but if panic controls the steering wheel, you'll crash in calm waters. Most traders don't fail because the market is cruel. They fail because they bring chaos into a place that demands clarity. The traders who make millions don't wake up smarter than everyone else. They wake up calmer, more patient, more detached. They don't chase candles. They don't revenge trade. They don't try to prove they're right. While others panic during losses, they execute rules. While others feel euphoria during wins, they protect capital. Their edge isn't on the chart, it's in their head. This is why two traders can see the same setup, enter at the same price, and leave with different results. One follows the plan, the other follows emotion, and the market always exposes the difference. The right mindset doesn't make trading easy, it makes it repeatable. And repeatability is where consistency lives. Consistency is where confidence grows, and confidence controlled, disciplined confidence is where millions are built. Before we break this down into parts 1 to 7, understand this clearly. If your mindset isn't trained, every win will make you reckless, and every loss will make you fearful. The chart only reflects price, but your results reflect you, and that's where the real work begins. 1. The invisible edge. When I first started trading, I thought confidence came from winning. If I could just stack enough green days, I believed fear would disappear on its own. I was wrong. The truth is, most traders don't lose because they lack confidence. They lose because their confidence is fragile, built on recent results instead of internal control. I remember a trade that looked perfect, clean structure, clear entry, reasonable risk. I entered calmly, but the moment price moved against me, everything changed. My breathing tightened. My eyes locked on every tick. I started adjusting levels that were never part of the plan. I wasn't managing risk anymore. I was managing discomfort. That's when I realized something uncomfortable. My strategy was fine. My mindset was not. A strong mindset in trading doesn't mean you feel fearless. It means you act correctly despite fear. Most traders think discipline is something you turn on during a trade. In reality, discipline is built long before you ever click buy or sell. It's built in how you prepare, how you wait, how you accept uncertainty. Your mindset is like a seatbelt. You don't put it on because you plan to crash. You put it on because crashes are part of the journey. Professional traders don't avoid losses. They're prepared for them. When a loss hits, it doesn't shock them into emotional reactions. It fits inside expectations. They already accepted the outcome before entering a trade. That acceptance is what keeps their execution clean. Beginners enter trades hoping to be right. Professionals enter trades knowing they might be wrong and being okay with it. That difference alone changes everything. Without the right mindset, every loss feels personal. Every drawdown feels like failure. Every winning streak feels like proof you're invincible. And that emotional roller coaster slowly destroys consistency. But with the right mindset, losses become data, wins become statistics, and trading becomes a process, not a drama. This is why mindset isn't a motivational concept, it's a survival tool. Before risk management, before strategy refinement, before scaling accounts, if you can't stay mentally stable when price moves against you, the market will always find a way to push you out at the worst possible moment. 2. The need to be right. There's a mindset trap almost every trader falls into. usually right after they start seeing progress. It doesn't feel dangerous. It feels logical, responsible, even professional. The need to be right. I remember the moment clearly. I had done my analysis, marked my levels, followed my rules. When price moved against me, I didn't think, I'm wrong. I thought, the market is wrong. So I held. Then I added. Then I explained the trade to myself over and over, trying to justify staying in. That wasn't confidence. That was ego wearing the mask of patience. The market doesn't care how clean your analysis was. It doesn't care how much time you spent preparing. It only responds to execution and risk. But the need to be right makes losses feel like an attack on identity. And once trading becomes personal, logic quietly leaves the room. Trading with ego is like driving while staring at the rearview mirror. You're so focused on defending what's already happened that you miss what's unfolding in front of you. Every time you refuse to accept a loss, you're no longer trading price. You're defending a story. And stories don't protect capital. Profitable traders don't argue with the market. They listen. They don't ask, why is this happening? In frustration, they ask, what is price telling me now? The moment your rules are broken, the decision is already made. Not emotionally, not impulsively, but mechanically. The need to be right creates hesitation. Hesitation delays exits. Delayed exits turn small losses into account damage. And the most dangerous part, this mindset often hides behind discipline. You tell yourself you're being patient. You tell yourself you're trusting the setup. But deep down, you're just unwilling to accept being wrong. Millionaire traders understand something simple. Being wrong is not failure. Staying wrong is. They cut trades quickly not because they're afraid, but because they respect probability. They know their edge plays out over hundreds of trades, not one emotional decision. When you release the need to be right, something powerful happens. Losses stop hurting, exits become clean, and your mind stays clear for the next opportunity. 3. The cost of impatience. Impatience doesn't announce itself loudly in trading. It whispers. It tells you the market is moving without you, that this setup is close enough, that waiting one more candle might mean missing everything. I've felt it too. Staring at my laptop, watching price move just near my level, heart speeding up as if the market was daring me to act. I knew my rules. I had written them down. But in that moment, discipline felt slow, and action felt smart. So I entered early. At first, it looked fine. Price hovered. I told myself this was normal. But deep down, I knew the truth. I didn't enter because my setup was complete. I entered because I didn't want to wait. That trade didn't fail because the market was unpredictable. It failed because I was impatient. Impatience in trading is like pulling a cake out of the oven too early. It looks finished on the outside, but inside, it collapses the moment you touch it. Most losing trades aren't bad ideas. They're good ideas taken at the wrong time. Impatience pushes traders to manufacture opportunities instead of letting them form. It turns boredom into risk and waiting into frustration. And the market punishes that behavior consistently. Professional traders don't trade often. They trade precisely. They understand that their job isn't to be active. It's to be available when conditions align. While others force trades to feel productive, they sit comfortably in inactivity, knowing that no trade is always better than a bad one. Impatience creates a dangerous cycle. You enter early. You experience unnecessary drawdown. Your confidence weakens. And now, when the real setup comes, you hesitate. That's how accounts slowly bleed. The right mindset reframes waiting. Waiting is no longer wasted time. It becomes preparation. Every minute you don't trade impulsively is capital protected. Every setup you skip strengthens discipline. And every time you follow your rules, even when bored, you reinforce trust in yourself. Millionaire traders aren't rushed. They don't feel chased by the market. They know opportunities are endless. But capital is not. Once you internalize that, patience stops feeling like resistance and starts feeling like power. 4. Fear after loss. Fear doesn't usually show up at the beginning of a trading journey. It shows up later, after you've tasted losses, after confidence has been cracked, after you've told yourself, I can't afford another mistake. I remember that phase clearly. I wasn't reckless anymore. I wasn't impatient. On the surface, it looked like progress, but something was wrong. Perfect setups would appear on my laptop screen, clean and aligned with my rules, and I would just stare at them. My cursor hovered, my hand hesitated, my mind replayed past losses like warning signs. What if this one fails too? What if I'm wrong again? So I waited and watched price move exactly as planned. Without me, that pain was different. Not the pain of losing money, but the pain of losing trust in myself. Fear after loss is like driving with your foot hovering over the brake instead of the accelerator. You're still moving forward, but never fast enough to reach where you're going. Losses had trained my mind to associate action with danger. Every trade felt like a threat instead of an opportunity. I wasn't protecting my account anymore. I was protecting my emotions. This is one of the most dangerous phases in trading, because fear looks like discipline. You tell yourself you're being cautious. You tell yourself you're waiting for confirmation, but deep down, you're avoiding pain. Millionaire traders don't eliminate fear. They manage it. They understand that fear is a signal, not a command. It reminds them to follow rules, not abandon them. When a setup meets criteria, execution becomes automatic, not emotional. Fear only becomes destructive when it controls decision-making. The right mindset reframes losses. A loss is no longer a warning sign. It's a cost of doing business. When you truly accept that, fear loses its grip. You stop asking, "What if this trade loses?" and start asking, "Did I execute correctly?" That shift changes everything, because trading success doesn't come from avoiding losses. It comes from staying consistent despite them. 5. When winning becomes dangerous. Overconfidence doesn't enter trading loudly. It slips in quietly, right after a winning streak. I remember that phase vividly. A few solid trades in a row, clean execution, account growing faster than usual. For the first time, I felt in sync with the market. Every decision felt sharp. Every read felt obvious. That's when my rules started to feel optional. Risk per trade increased slightly. Stops became wider just this once. Setups didn't need to be perfect anymore, just convincing. I told myself I had finally leveled up, but the market wasn't rewarding skill. It was testing restraint. Overconfidence in trading is like loosening your grip on the steering wheel. Because the road has been straight for too long, nothing goes wrong immediately. But when the turn comes, you're unprepared. Winning had changed my behavior, not my strategy, and that's the danger. Losses usually hurt accounts slowly. Overconfidence destroys them suddenly. The mindset shifts subtly. You stop respecting risk. You start trusting feelings over rules. You confuse momentum with mastery, and the market waits. Millionaire traders treat winning streaks the same way they treat losing streaks, with neutrality. They don't celebrate too much. They don't size up emotionally. They understand that wins don't mean they're smarter. They mean probability is playing out. Overconfidence makes traders feel untouchable. The right mindset keeps them grounded. The best traders I've studied do something counterintuitive after wins. They slow down. They review execution. They double-check risk. They remind themselves that the next trade is independent of the last one. Because the market doesn't reward confidence. It rewards consistency. Overconfidence turns trading into gambling disguised as skill. You stop asking, "Is this within my plan?" and start asking, "How much can I make?" That question alone changes behavior, and not in a good way. The right mindset reframes winning. A win isn't proof, it's feedback. When you internalize that, you stop chasing the high of being right and start protecting the process that keeps you profitable. 6. Detachment. The calm that builds millions. There comes a point in trading where emotions don't explode anymore. They just fade. At first, that silence feels strange, almost wrong. No rush after a win. No heavy chest after a loss. Just execution, review, and waiting. I remember the first time I noticed it. I closed a losing trade exactly according to plan, leaned back in my chair, and felt nothing. No anger, no disappointment, no urge to jump back in. Just clarity. That's when I understood something most traders never reach. Detachment isn't coldness, it's freedom. Before this phase, Every trade felt like a reflection of who I was. Wins meant I was smart. Losses meant I was failing. My identity was tied to my P&L, and that made every decision heavier than it needed to be. A detached trader is like a referee, not a player. You're watching the game closely, making clear decisions, but you're not emotionally involved in who wins the point. When you detach, trades stop defining you. They become events, not judgments, data, not drama. You no longer need the market to validate you. This is where consistency quietly forms. Millionaire traders don't feel heroic when they win. They don't feel broken when they lose. They feel neutral. And neutrality is powerful, because when emotions flatten, execution sharpens. You stop forcing trades to feel productive. You stop avoiding trades to feel safe. You simply follow your system. Detachment also changes how you view time. You stop obsessing over daily results. You start thinking in months, then years. One trade no longer matters. 10 trades don't matter. Only the process matters. This mindset is uncomfortable for many traders because it feels boring. There's no adrenaline, no story to tell yourself, just repetition. But that boredom is where money is made. The market doesn't pay for excitement. It pays for discipline repeated long enough to compound. Detachment doesn't mean you don't care. It means you care about the right things. Rules over emotions, process over outcome, consistency over intensity. 7. The mindset that compounds. At some point, everything clicks, not suddenly, not dramatically, but quietly. You no longer feel like you're trying to trade well. You're simply operating the way you're supposed to. I remember looking back at my old trading journal one night, pages filled with emotional notes, forced trades, excuses, frustration. Then I looked at my recent entries. Fewer words, cleaner logic, smaller reactions, bigger consistency. Nothing about the market had changed. I had. This is where the right mindset finally shows its real power. Not in one big win, but in thousands of small, controlled decisions that stack on top of each other. The right trading mindset is like compound interest. It feels slow at first, almost invisible, but given enough time, it becomes unstoppable. Every disciplined exit protects capital. Every patient wait avoids unnecessary risk. Every rule-followed trade reinforces trust in yourself. Individually, these actions feel insignificant. Together, they build something massive. Millionaire traders don't rely on motivation. They rely on structure. They don't ask themselves how they feel about a trade. They ask whether it fits the plan. They don't chase growth aggressively. They let consistency do the work. This mindset removes urgency. There's no rush to make it. No pressure to prove anything. You stop trading to escape your current situation and start trading as a long-term craft. Losses no longer feel like setbacks. Wins no longer feel like breakthroughs. Everything becomes part of the same system, and that system compounds. The biggest shift happens when trading stops being emotional labor and becomes operational execution. You show up, you wait, you execute, you review, you repeat, day after day, month after month, year after year. That's why most people never reach this stage. It requires patience without excitement, discipline without praise, confidence without ego. But for those who do, trading stops feeling heavy. It becomes calm, predictable, almost boring, and boring is profitable. The right mindset doesn't promise fast money. It builds lasting money. Because in trading, millions aren't made in moments of brilliance. They're made in moments of restraint, repeated long enough for compounding to do what emotion never could. If you've made it this far, understand something important. You're already ahead of most traders, not because you've mastered entries, not because you've found a secret indicator, but because you're willing to work on the one thing most people ignore, the mind behind the trade. The market never asked you to be perfect. It only asked you to be consistent. Every part we talked about, patience, discipline, fear control, humility, detachment, was never about becoming emotionless. It was about becoming intentional, about choosing responses instead of reactions. Your trading mindset is like the foundation of a building. No one sees it, no one praises it, but without it, nothing above lasts. You can build fast without a foundation. It will look impressive for a while, and then one bad storm, one drawdown, one emotional spiral brings everything down. The traders who make millions aren't special. They're structured. They don't wake up every day feeling confident. They wake up committed. Committed to rules. Committed to patience. Committed to protecting capital more than chasing excitement. That's why their results look boring from the outside and extraordinary over time. If you're still struggling, that doesn't mean you're failing. It means you're early. Every disciplined decision you make today, especially the ones no one sees, is a brick in that foundation. Every time you don't overtrade, don't revenge trade, don't break rules, you're training the version of yourself that can handle bigger size, bigger pressure, and bigger opportunities. Trading doesn't change your life overnight. It changes you first. And once you change, the results follow. If this series helped you see trading from a clearer, calmer perspective, support the journey. Like this video to help it reach other traders who need this mindset shift. Share it with someone who's talented but struggling emotionally. And subscribe if you want more honest, grounded trading content that focuses on longevity, not hype. Remember this, charts move every day. Opportunities come and go. But the mindset you build now, that's what compounds for life.